Yeah, Monday. What's up, everybody? Monday morning, the 29th of November. Hope everybody's having a phenomenal day. We are ready to rock and roll with our morning market commentary. I will tell you, last night I did the live trade room. It was the first time I'd looked at the market since Wednesday, and it was some interesting things to take a look at, get some first evaluations of the markets. Sometimes it's good to take a couple of days off and not pay any attention, although I feel like I missed a roller coaster of a day on Friday, as we did have a pretty strong move down. So let's go ahead and dive right in on our four major markets: the S&P, the NASDAQ, crude oil, as well as gold. And one quick announcement we've got for those of you that are interested in learning more about cryptocurrencies, go to tradersarmy.com/cryptos. Tuesday, November 30th, 8 p.m., we're going to be doing our Crazy for Cryptos webinar. Herman Casas, who is our crypto expert, is going to go through and talk about what do we do with cryptocurrency. Doesn't cost you anything. Good to come in, learn a little bit. If you're like myself and you've been trading options and futures and stocks and all that, but you haven't really looked into cryptos, maybe now's the time. Okay, let's dive in. S&P is up 36 points, and you would say, wow, that's a lot. Well, after the debacle that we had Wednesday through Friday, we really have just rallied and bounced back a little bit. Now, I truly believe that this area here was a pivotal reversal point last night. This little base drop, the region that we had, I thought that was going to be a pretty pivotal reversal point. Unfortunately, we never made it back to that level. We actually had a reversal candle right here, and then price just dropped from there. And I know one of our members, I think it was Vince, who said, hey, Chuck, doesn't this look like it could be a candle-to-candle setup? And it actually was, for a nice little move down if you were awake and taking that trade, taking that position. It did actually give you a couple of points for an intraday overnight trade, and still hasn't come above that candle since we've been higher. So as we open up this morning, it's really going to be interesting to see what does the market do in reaction to Friday's move. Is it going to be that this was just a bit of a short covering rally? Because you think about this 37 points. This 37 points really only happened on the gap up and the first three candlesticks. After that, we've kind of gone sideways. And so the fact that we didn't get any follow through on that move up after the European Open really tells me that there's a chance that we continue to trade down throughout the day today. So one of the things that we typically tend to look for are potential trap areas, areas of demand below Globex lows. But we could just get a bit of, if we get basing here in front of this 46.18, look for a potential breakdown for price to drop for a small intraday opportunity. In the NASDAQ, we didn't have anything clear as clean in the NASDAQ for a reversal trade. We had this confirmation short up in here, but very similar picture to the S&P, that we are coming down and a little bit of a move here on a 15-minute chart. So let's see if this breaks down, and you've got, once again, more room for price to continue to fall. So I would look to that in the morning. The markets may rally as soon as we open, but I think we're better off probably looking for price to continue to drop. Crude oil is another one where we had a humongous sell-off, and that humongous sell-off that we had in crude oil, once again, last night we got a little rally. But the fact that that when the London markets opened, we didn't get a follow-through really tells me that we may see prices continue to fall. And so keep an eye on this one for a potential breakout of this small 15-minute pinching region. If nothing else, there's a really nice supply area up here at about 73.60 would be your next supply area reversal point in crude oil. Now, it's possible we could break out above there and just make it up to here as a target and then reverse back down. Our big picture trend is clearly down in oil, but this is nearly a parabolic move, and so it's really hard to get in on a supply level on these parabolic moves that come back down like this. Remove some of those areas there. And then we got gold. So looking at gold, we haven't really been doing a whole lot of trading in gold because we've just seen that gold has been violating levels left and right and moving all over the place, and it's not been as effective and moving quite as well as it had in prior months. And so when I'm looking at gold today, I just don't see a whole lot of great levels out there. We've got that supply level up above us at 1837. But the market that we have been using to replace gold has been the euro. So let's take a quick gander at the euro. And this is what we looked at last night as a potential. And so one of the things we were looking at last evening was if you were so inclined to take a bit of a breakdown below this region, then you might get a decent move. Now, we looked at that on the 15-minute chart, and we didn't really get a strong move away from that breakout. We got a really strong, move down. And that strong move down was quick and violent, but it didn't hold as we dropped down to this region and rallied back up. So now, as I look at this, certainly I'm going to continue our 4 hour gave us actually a pretty strong rally. And we saw a little bit of the slowing of the momentum, but I'm certainly not willing to change my overall direction from bearish to bullish just yet. And so I'm still going to look for short opportunities as they present themselves. One very well may present itself with this little gap fill region right in here, so keep an eye on that one for today. Now, for our stock of the day, I want to just take a real quick look at some of our FAANG stocks, and specifically the one that I want to pay the most attention to is Apple. And the reason I want to pay the most attention to Apple is because this and this both make me a very happy man. I like the lower level better than the upper level. So the upper level in my mind is more of a confirmation entry, and the lower level is more of a limit entry. This is a really clean demand area in a very strong stock. So look for a potential pullback into that region. Facebook's been a little bit wonky as of late. These two upper wicks tell me a story that we're having a really hard time getting above that price action. That's a lot of selling pressure right up in there. So technically, there could be a breakout above that region. That'd give us 3 touches, and a breakout above there would be kind of an inverted head and shoulders pattern back up. A look kind of a messy one, but it would be one. But as far as supply demand reversal areas, there's nothing clean enough for me to lean on. Lots of gaps happening. Microsoft, we're seeing a slowing of momentum on the move up. Microsoft is slowing its momentum on the move up, but not enough for me to be willing to change directions on the position. If you want to be a bit aggressive, you could theoretically, if you think that we're overcooked and that the markets in general have a better chance of coming down over the next few days, and you want to be a bit more aggressive, this was a good gap fill area. Price came in, gave it a retest, and then moved away. There's a potential that we could get a breakdown trade below some of these lows, right? Depending on where we open up this morning. Now, this morning, we're going to open up around 333. So we're going to gap up and open up somewhere in this region here, which would make it a little bit less likely for price to then break down below. But keep an eye on that for a potential breakdown. Amazon rallied up pretty hard last week, had a really strong bearish engulfing candle here. So that's a reversal candlestick pattern. Looks like we're going to open up a bit higher, but not as high as some of the others. 35.27 by 35.30, which is just a little bit of a rally up from where we closed. And so on a strong candlestick reversal pattern like this, you get low below the first candle's low. So if you wanted to get low below Friday's low, that could be a decent swing trade opportunity for price to come back down into this region. But ultimately, I think that until proven otherwise, Amazon might be better to continue to trade higher long term. But for a day trade, for a short swing trade, if we get below Friday's low, I think you can see price continue to move. The Googler is relative to the other ones, it's a little bit more stable as far as no big whips compared to Facebook and Amazon, especially. We do have a decent demand area here that we're coming close to, so that could be a little reversal point in Google. But if we come out of this and we only make it back up to here, that would be a really slowing momentum trade and actually signal a potential reversal. When I look at this, I see a potential rising wedge pattern here, and that rising wedge is typically going to be a bearish setup. So we may get a bounce off of this, but I wouldn't look for it to go very, very high. I think that we're getting a little bit of a rising wedge setup here in Google. And then last is Netflix, and looking at Netflix, strong increase in volatility in the last few days, and I think that looking at this, we're setting in a really nice kind of double top pattern where I'd look to see does this area of support get broken? If this area of support gets broken, I don't know that this demand area down here is going to hold. And so look for that for a potential breakdown. So what I'm seeing in all of these FAANG stocks is a little bit of a story that says bullish, bullish, bearish, bearish, wild, wild, bullish. So 2 of them are bullish, 2 of them are kind of bearish, and 2 of them are a little bit more wonky, a little wild. And so that's kind of indicative of our market in general today, right? We've got the NASDAQ showing some strength, the Russell going down, the Dow Jones was kind of sideways, the S&P was a little less sideways. It's very indicative of our overall markets right now. In that, I think that we've rallied up really, really far, but I'm going to let the charts tell me what to dictate, and I'm not going to try to guess and predict. So that's all I have for today, everybody. I will see you tomorrow. Remember, go to tradersarmy.com/cryptos to register for our Crazy for Cryptos webinar. We look forward to seeing you in there, learn a little bit more about how to activate your crypto trading. If you've not already started it, now's a good time as any to take a look at it. But until tomorrow, everybody, hope you guys have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually live and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.